Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for gold, or the value of gold versus the US dollar. The date is February 28th, 2021. It is 8:40 a.m. Eastern Standard Time. If you want to stay up to date with all of our videos, make sure you click that subscribe button on the bottom right-hand corner of your screen. And if you want to learn how to trade, check out our link below for our Udemy course. Okay, so getting to analysis for gold, I'm bearish to 1650, meaning I still think this week we're going to see some more drop. US dollar had a major comeback last week. And just by looking at last week's candle alone, we can see this fairly large bearish candle. That is enough cause for me to think we're going to see a little bit more down action. As you can see, we're sitting on the 38 Fibo line from the low way back here in August of 18 to our most recent high in August of 2020. So looking at Fib retracement, we're sitting on the 38.2 line. However, I don't think we're just going to see a big bounce back yet, because I think we're going to go back down and test this support zone right about 1650-ish. You can see I have a blue arrow on this line marked, which, as you notice, coincides with the 50% Fibonacci mark. So I still think we're going to see a little bit of down action before we go up. Well, the good news is that'll get us a little bit more even with this 200-week moving average. As you can see, last time that happened, back when these lows first occurred, so we saw a major shift up where the value of gold almost doubled. So even though we're seeing a slight dip now, having price cool off, if you will, for a few weeks or months is actually probably a good thing in a larger uptrend. Gives us another opportunity to buy at a lower price, and it's going to help us settle up with this 200-week moving average. Because what you'll notice is anytime price moves too far ahead of any one of the moving averages, price will always retract and eventually want to catch up. And so we can see some poking right here, right where price comes down another $100 or so. You'll see a lot of news articles and social media articles about it. But typically, as everyone's writing about it, that's when traders are looking to get in for the trend reversal or continuation. So let's go ahead and switch to the daily view. Here we go. Okay, as you can see here, we're moving underneath the fast moving daily average, which means, and these last couple of days have been pretty bearish. These are from pretty bearish candles. I think we're going to see at least another 4 or 5 pretty bearish candles, but it all really matters what happens here. If we see some buying and some, the candlesticks will have the very sharp tails in the bottom where price keeps trying to push above. That means we'll have a lot of strong buying support from banks and traders. And that'll be my key to get in for the next move up. But for now, a little bit of bearish action for this week. Expect more strength out of the US dollar. If we see a bounce back in gold and other commodities, it's awesome. But even if we do, I think it would be short-term. I think we're going to see bearish action into April. Okay, good luck this week, and hope to make lots of money trading. Bye.